Hey, welcome to the Explainer. Have you ever really thought about how the government sees your money? Because it's not all just one big pile. Today, we're going to break it all down. We're talking about the 8 key ways your income can be classified in Malaysia. By the end of this, you'll know exactly where every ringgit you earn fits into the big picture.
So yeah, let's kick things off with that question. How does the government actually classify your money? Because, they don't just see a single number on your bank statement. They see different kinds of income. And honestly, getting a handle on these different types, that's the first step to really understanding your taxes.
But before we dive into all the nitty-gritty categories, let's just zoom out for a second. Let's talk about the why. Why do we even have taxes in the first place? Understanding the big picture here makes all the little details click into place.
So, what even is a tax? At its most basic level, it's just the money the government collects from all of us to pay for the stuff we all use. I'm talking about roads, hospitals, schools, you name it. It's kind of like we're all chipping in to fund our society. A collective investment, if you will. But here's the thing, it's not just about raising money. Taxes are actually a super powerful tool for the government. They use them to generate revenue for sure, but also to regulate the economy, fund huge development projects, and even trying to shrink the wealth gap. Oh, and they also use it to steer our behavior, right? Like putting high taxes on things like smoking and gambling. Okay, let's get to the main event. This is what we're here for. We're diving deep into the 8 specific types of taxable income. This is the actual legal framework that sorts out every single ringgit you earn.
Yep, just 8. That's it. Every single type of taxable income in Malaysia falls into one of these 8 classes. It's not 100, not 1,000, just 8. So let's go through them one by one. First up, we've got Section 4A, Business Income. This one's pretty straightforward. It's for all the business owners, the entrepreneurs, the freelancers out there. If you're running a trade, a profession, think doctors, lawyers, or any kind of commercial venture, the profit you make, it lands right here.
All right. Next is Section 4A, which is a bit more specific. It's about the gains you get from disposing of capital assets. So what on earth does that mean? Well, think of it like this. Your business owns some big ticket items, right? Maybe a building, some heavy machinery. If you sell one of those things for more than you paid for it, that profit you made is taxable under this section.
Now, Section 4B. This is the one most of us are familiar with. This is employment income. We're talking about your salary, your wages, bonuses, commissions, basically any money you get from having a job. It's probably the most common category, but as you're starting to see, it's really just one piece of the puzzle.
Okay, on to Section 4C. This is where your money starts working for you. We're talking about income from dividends, interest, and discounts. So if you own stocks and get paid dividends, or if you're earning interest from a savings account or bonds, that income falls right into this bucket.
Next, Section 4D covers rental, royalty, and premium. This one's pretty diverse. If you're a landlord and you're collecting rent, that's here. But it's also for creatives. If you've written a book, composed a song, or created something that earns you royalties, that income gets classified under this section too.
Then we have Section 4E, which deals with pensions, annuities, and other periodical payments. This is often income you receive later in life. So your pension after you retire, that's here. Or maybe you have an annuity that pays you a regular amount. Yep, that's in this category as well. So, you might be wondering, what if I earn some money that just doesn't seem to fit anywhere else? Well, that's where Section 4F, or Other Income, comes in. You can think of this as the catch-all category. It's for any other profits or gains that don't neatly slot into the other definitions. And last but not least, we have Section 4A, Special Classes of Income. Now this one's a little more technical and often deals with international payments. For instance, if a company pays for technical advice or services from someone overseas, that payment would be classified under this special section. And there we go. Let's just look at them all together. Business income, employment income, rent, dividends, everything. This is the complete framework. Every type of income you can think of has a home in one of these 8 categories. This is the map the tax authorities use to understand where your money comes from.
Okay, so we've got the 8 categories down. But hold on, because there's another really important distinction we need to make. It's the difference between an income receipt and a capital receipt. The key takeaway here is that not every single ringgit that comes your way is actually considered taxable income.
And this chart breaks it down beautifully. On one side, you've got your income receipts. These are generally taxable. Think about money from your regular activities, like selling goods or providing a service. But on the other side, you've got capital receipts. These are usually not taxable as income. We're talking about things like gifts, donations, or even gambling winnings. They're typically one-off events, not a steady stream of earnings. All right, so now that you know all the different ways income can be classified, the really important question comes up. Does this even apply to me? When do I actually have to register for a tax file and start this whole process?
Well, it's not a guessing game. There's a specific number, an income threshold. Once you cross that line in a single year, you're legally required to get a tax file. So, what is that magic number?
There it is, 34,001 ringgit. That's the threshold. And an important detail here, this is your annual income after your EPF has been deducted. If you earn more than that, it's time to register a tax file. It's the law.
And one more thing to keep in mind, when the Tax Act says person or taxpayer, it doesn't just mean you or me. It's a broader term. It can also mean a company, a club, a trust, or a cooperative. If any of these entities earn an income, they're part of the system too.
So there you have it. You now know the 8 fundamental categories of taxable income in Malaysia. And that's a huge first step, right? Because once you understand where your money fits, you can start asking the next big question. So, what can I do about it? This is where things like tax reliefs and deductions come in. Knowing these categories is your launchpad for much smarter financial planning.